Good morning, everyone. Today we're going to be looking at the NASDAQ futures market. You can see this morning's session is what ICT would classify as seek and destroy. Today is not a good day to be trading, and you should not be trying to go out there and pass your funded accounts or trade your funded accounts or pass your evals. This is seek and destroy, and it's a bad day to be putting risk on the table. So here you can see this orange vertical line is the 9:30 market open, and you can see price comes down, takes out sell side liquidity, and then immediately shoots up, taking out the buy side liquidity. And this candle here is 160 points in 1 minute. When you see that right there, it's just best to stop trading and just watch the markets. Here's your first presented fair value gap. You can see price shoots up through it, comes back down into it. Now on a normal day, this would be a good trade entry right here as price comes back into the first presented fair value gap. But with that very large candle there, you want to wait. You want to see what price does. And as you can see, each of these candles is just overlapping each other. It's kind of whipsawing back and forth, and then it takes out the buy side again. Then it comes down, and then it's just trading this wick. Starts right here, and then it drops 50 points just on the wick to take out that little sell side liquidity there, and then it goes all the way up to take out this buy side liquidity. So this is exactly what seek and destroy is. It takes out the buy side, it takes out the sell side, goes back and takes out the buy side. Then we can see we come back down, take out the sell side liquidity just underneath the wick, tap into the first presented fair value gap, and then shoot all the way back up, taking out the buy side liquidity. Now this was the initial target for the day, the daily high from April 15th, which does get hit here, but it's very low probability conditions. And then as soon as we hit the high, price drops back down into this fair value gap. We can see the body's respecting it, but the wicks here are doing a lot of damage. So all of this price action here all of this is not anything you want to be trading. All of that is very low probability trading. Now we can see here at 11:23, 11:22, these candles, we go through this fair value gap right here. We trade down through it, we come back up, and we're respecting the consequent encroachment of it. So this is when you see that the algorithm is starting to kick in and price is respecting these levels that ICT uses. And that's when we want to start looking for trades. So we go down, very large candle here, come back up, and the first presented fair value gap acts as an inversion fair value gap. So we come down, come back up into it, the bodies are staying inside, and then we drop again, creating this fair value gap here. And we see the bodies below the consequent encroachment. The wicks are coming up a little bit, but that's okay. Then we drop down again, creating another fair value gap. So right in here is a good opportunity to get into a trade short. And if you miss that, you have a second opportunity right in here. Right there, another fair value gap is created to the downside. So we have this market structure shift. We're bearish. We return to the fair value gap, drop again, creating another fair value gap here. And the price comes up into it. We're respecting the fair value gap. And we drop again. And this could be your target right here. 5-minute relative equal lows. Or you can see on the 1-minute chart as well, these relative equal lows from 5:45 this morning. If you were to get in short right there, your stop loss has to be above the candle. You say you can risk 25 points. Now it would be better to at least come up to the consequent encroachment. So risking about 45 points. That would be a better stop loss. And if you can't afford that, trade the micro contracts, MNQ, which is 1/10 the size of this. That way you can afford more of a risk there. And 85 points in profit you can get. That would have been your trade setup. Waiting for all of this seek and destroy profile. Wait for that to do the damage. And then here you see prices starting to respect these fair value gaps. It respects it. Here is an inversion, respecting this fair value gap. So that's when you want to be looking for moves in the market. But anytime you see price acting like this, each candle up and down, up and down, up and down, it's best just to not trade and wait for the next session, whether it be the afternoon session or wait till the next day. There's always another trading day. That's going to be it for today, everyone. Thanks for watching. If you liked the video, make sure to like and subscribe, and have a good one. See you next time.